going to start with this one. I love this one. Kind of described our industry. Apologies, it's moving by itself. Look for markets that fall for 3 years and have lost 80% of their value from the peak. Pretty well describes the uranium industry. We're down 83% from our peak. We're down for 9 years consistently. But even from 2011, we're down 70% on price. The market's in a dichotomy, and I thought it was useful really at the moment to really hit the market description first and explain to you why we got a dichotomy in this market. Where have you seen an industry that for 30 years has been in a supply deficit but is looking at a 12-year price low? This industry since 1945 to 1985 was building inventory. Why? Because the US and the Russian governments controlled all the inventory and took it on board. Since 1985, the world has survived in the uranium market by buying back those inventories from the governments. That has continued and continues to be the case. We're still in a supply deficit. What has happened though in recent years, in the last couple of years, is that inventory has been moving from the government into the utilities. And that's the problem we're currently sitting with. After 30 years of deficit, the inventories are now 50% held by the utilities themselves. I thought it was useful to put this up here and explain to you that this isn't all bad news. If you look at the governments, they're holding about 50% of the inventory still, but 70 to 75% of their inventories are actually depleted uranium tails. They've actually been through the enrichment process once before. If you look at the Russian inventories, most of those are below the lowest enrichment grades. So getting any more uranium out of their inventory becomes quite difficult. The problem you're sitting with is the blue marker there, which is the total utilities. That is what's currently being held by the guys who convert it into energy. However, again, you've got to look at the numbers and see what actually you're looking at. If you strip out the blue line, which is on the right hand, that is just around 2 years of inventory. So if you take the whole world, excluding China, and we'll come back to them, the world is holding about 2 years of inventories. It takes you between 2 and 3 years as a utility to turn yellow cake into a fuel rod. So all of these guys do hold 2 years. That's pretty consistent for them, because if you're running a nuclear power station, the last thing you want is no fuel rods. Kind of limits your controls. If you break that down a little bit more and you look at the major areas, US and Europe are around 2 years each. That's pretty well in line with their norm. They're slightly above, but certainly not a long way off where their inventory positions are. The rest of the world is about 25%, other than China and Japan. They don't hold inventory. And in fact, if you look at India, which has got a big growth program going forward, they only hold 3 million pounds of inventory at the moment. They want to build that up over the next 10 years to 39 million pounds. So there's buying going to be coming from that part of the world. The two that are interesting, one on the negative, one on the positive. The negative is Japan. Japan is still holding a very large inventory. It's sitting with about 7 years of inventory position at the moment relative to the demand pull. The one that surprised everybody was China. China is sitting with almost 300 million pounds of inventory. That looks really scary when you're looking at the demand for 2015, but China has a massive build story going on out there. If you put that in line with where we're looking for them to be in 2013, that's less than 5 years of inventory. So China is building inventory now while it's cheap because it has an enormous program. So what I would say to you is when you look at inventories, be careful of what you're looking at here. But it is affecting the market at the moment. What we're seeing is the short-term buyers, the spot traders, they're happy to buy, they know there's inventory around, and that's why you've seen the spot price drop all the way down to $23 a pound. But you look at the other side of this market, and this is the problem that the long-term buyers are having. You look from 2020 onwards, this market goes into deficit, and a really big deficit, and it starts to get quite scary. And when we talk to people like EDF while we're trying to put the financing structuring together for our company, from 2020 to 21 onwards, they are looking for long-term off-trade contracts because Cigar Lake only has an 11-year life. Rossing is due to close between now and 2024. Areva, the 2 mines next door to us, are due to close. Those 3 projects alone account for 23% of global production. So you can understand why 23% production coming off and the demand growth going up by 50% is pretty scary for the utilities who are looking for long term. If you take the top curve on there, and I use this as a cumulative supply and demand curve, by 2030, if that was the demand, that's £800 million deficit cumulative gets built up in the next 15 years. That is the full inventory that the utilities have today would be wiped out if you don't get demand coming on. So you can see the market needs price move. The long-term buyers are starting to get nervous. The other thing that's important for us is when we look at this, I'll just point out the two best performing uranium stocks in the last cycle in the bull run were Energy Fuels and Paladin Resources. And what did they do? They built mines. And that is the difference between GoviEx and many other companies. We are going to be building mines in this cycle. The company started in 2007. We started with a major project in Niger. We did a substantial 650,000 meter drilling program, produced 120 million pounds of resources there, which 110 is in the measured and indicated. We've taken that all the way through. It's now fully environmentally permitted last year, and we have our mining permits fully signed off. So that, subject to financing, is ready to go. This year we acquired our projects from Denison when we merged our assets together, so we now have Zambia. That's also fully permitted. It's about 50 million pounds in the ground, fully environmentally signed off. And we have Mali, which has got about a 30 million pound resource. Full technical reports already done to that. It's actually got a semi-pre-feasibility study already done on it. About $220 million have been spent on these projects on technical side of it. We're trading at about $20 million at the moment. So a lot of investment. This is massively undervalued. In building the company, we've put together quite an interesting shareholders. Cameco joined the company in 2008. They put $28 million in for a 12% stake. Toshiba came in 2012 as a lender. We converted that into equity in 2014. Toshiba owns Westinghouse. Westinghouse is the largest reactor and nuclear power supply provider in the world. They want offtake. They are large sellers of the AP1000 reactor across the world. They've just signed a big contract for 6 of them for India. They're looking for offtake to supply that feed. Ivanhoe, Robert Friedland's group, this is his technical side. Our major shareholder or founder was Govin Friedland, his son. Denison joined with the sale of their assets. The reason they put their assets together with us is they obviously focus very much on what they're doing in Canada, but they're also looking for leverage onto our project, and they were looking for somebody, a management team, to leverage up all of the African projects. One of the benefits of being in Africa is you get stuff done. Our permits took 6 months to do. The ones in Zambia took Denison 6 months to do. In the Canada, the average is between 10 and 23 years to permit a uranium mine. So, okay, so we are ready to go subject to financing, and that is effectively the program we're looking at the moment. These grades are good for Africa. We're about 3 times higher than the average. I'll give you an example though. Paladin currently have a grade of 0.05. Their cash cost is about $26 a pound. Our average grade is about 0.14. So grade, it makes a big difference here, but across the world, be careful. Some of the very high grade projects, and Denison will point this one out, they're 19.9. Their 19.9% project is a 50% higher cash cost, and they're 2.6% project. Why? Because uranium is quite dangerous to operate in at very high grades. Mineral resources. As a result of our transactions, we now hold 200 million pounds of uranium in the ground. On all of our properties, we have substantial exploration upside. We stopped drilling for exploration in Niger in 2010, and we just infill drill. We've drilled less than 10% of our property. The same in Zambia. We actually have 4 large drill targets in Zambia ready to be drilled. We know there's an extension because the company at the end has a mining license with a resource, and we haven't all the ground in between. It's never been explored. In Mali, again, Rockgate, who owned it, covered about 5% of the property and avoided all the major strikes. And those we can see from all our mapping shows that the deposits will extend. we have a plan really just to be a developer, and this is where we're going. Madawaela, fully permitted. We're working on the bankable feasibility study. The focus for us is all on optimizing this project at the moment. Our plan for financing this, we need $360 million of capital, and we put a press release out on this. We're going with the export credit agencies. Project financing in this market, there is almost non-existent. What you're seeing is a lot of companies having to go to the equity market. You've seen that with companies like Hummingbird, Berkeley. Projects in Africa and Europe are forced to go to the equity market to build projects, not debt. The export credit agencies will back projects in this part of the world, and as soon as you go to the accredited banks, they are more than happy to provide project financing if you can get an export credit agency support. We've had some indications of support from China, from Japan, from Europe, from Canada, from the UK. So we're starting that process. It takes longer, but you get the offtake agreements that go with it. You get the support you're looking for. Zambia, just running over here. Zambia, already permitted, got 2 to 3 years on that one. We just want to review that project. It's got a much larger resource than when it got its mining permit, so we put it 2 years behind. Falea, nice project, needs a bit more drilling on that one, but very exciting. Comes with a very interesting silver credit, 70 grams a ton of silver and a 0.2% copper credit as well. So looking for a low cash cost on that. So really, we got a strong shareholder base. I mean, this is really the who's who of the uranium industry. We got Denison, Ivanhoe, Toshiba, Cameco. Got experienced management either in this industry or generally working. I've worked all over the world, South America, Canada, Russia, been a banker as well. We are very Africa focused. We appreciate the value gap that sits there, but certainly you can get stuff done in Africa, and there are a lot of good projects, a lot of experience as well. Niger's been producing uranium for over 50 years. It's 8% of the world's supply. We're holding one of the largest uranium resource bases of anybody in the top. We're in top 5, including the majors that are producing. A lot of exploration upside. As I said, we stopped drilling because it just wasn't worth it. We wouldn't get the credit for, if we can't make a £100 million resource work, then there's no point in having a £200 million resource. We'll find that when we're ready to do it. In Niger, Areva started the Cameco project on 4 drill holes. They've been operating for 50 years. So we know where to find the uranium. There's lots of it around. We're in mining countries, Zambia, Mali, Niger. These are all long histories in the mining business and significant technical work. All of the stuff for a pre-feas is done on every one of these projects. I don't have to do lots of metallurgical test work. It's already been paid for already in the past. Despite all of that, I'm sitting at 1/5 my peer group on a value. So I'm the only company on there that's actually fully permitted, and I have 2 permitted mines and one of the largest resource bases in the industry, but we're trading at 1/5 of our peer group. Thank you very much.